Hey everybody, welcome to another real estate video. This is Javier Vidana, that real estate YouTube guy in Phoenix, Arizona, helping you accomplish your home goals. Today's video is something that you as a home buyer can do that really isn't thought about too much, but if you do this when buying a home, it can save you up to $1,200. One of the things that you do when you make an offer on the home is you establish at least your first guidelines of what you want in the home. So obviously things can be counter offered, but usually you establish which house you're gonna buy. Clearly you're gonna put the address. You're gonna establish the closing costs, the purchase price, all this really important stuff. But one of the things that you establish that's not really people aren't concerned about too much is the close of escrow date. This is a day where things are gonna officially close and the possession of the home will be transferred to you, and after that it is your home 100%. And it's sometimes important for people because they're trying to line up a certain day, maybe after a lease is expired or maybe a kid's birthday is right before or after it, so you kind of try to time things. But there's actually something of importance to the close of escrow date that could save you money, and that is your prepaid interest. But first, let me explain how the first month's payment works when buying a home. When you rent a place, you sign the lease, you pay your deposits, and you start paying rent the next month. When buying a home, it's a little different. The month you actually close on, you don't make a payment on. The month after, you don't make a payment on, and basically the month after you close is when you make your first payment. Let's just say you close March 1st. Well, you wouldn't have to make your payment in March. You wouldn't have to make a payment for April, meaning your first payment would be due May 1st technically. This is pretty awesome. That's like almost a 2-month gap, right? Well, it's the same exact scenario if you close March 30th. If you close March 30th, you don't make a payment in March, obviously there's days or hours left. You don't make a payment in April, and you make your first payment May 1st. So it doesn't matter what day you close on and the month you close, you won't make a payment for that month or the next month, and your payment would be due the month after that. And if you're following me, you're probably saying, well then at that situation, it makes 100% sense to close on the beginning of the month in any real estate transaction, because then you get basically 2 months for free, right? Well, not exactly, because the lender's not just giving you these months for free. They're there to make money. So they're gonna collect the interest up front. Most of the time, the interest of the second month, the month after you close, is collected and it's rolled into the mortgage, right? So you don't really see that. However, they do collect interest on the month that you close on. So if the lender's charging you $40 per day of prepaid interest, and that interest, it depends on your price point and your interest rate and your loan program, but most of the time, I see it be between $30 to $40. Obviously, if you're buying a $1 million house, it's completely different, but let's just use $40 as a safe number. So using my previous example, if you're closing on March 1st, they're gonna collect about 30 days of prepaid interest when you close on your home. And that, if you calculated 30 times $40, it's about $1,200 of extra fees. And how is it collected? Well, it's basically an added closing cost to your real estate transaction. On that same token, if you close on March 30th, well, there's only one more day left in the month. So you would only be charged an additional $40 of prepaid interest. So if your closing cost amount was nice and low, $4,000, it's gonna stay around that number. So if it feels like you're getting 2 months extra free, well, that's not really the case. The lender's still collecting that interest, and it's requiring more money from you up front. And the common thing to think is, well, in that case, can I just get the seller to pay my closing costs for me, even with the added $1,200, and I can still be winning? Well, yes, of course. I have helped clients that close at the beginning of the month, but maybe they have to do it because their lease is up in the 4th or 5th, whatever the number might be. I don't know about your market, but if your market is really difficult to get closing costs, they might make things a little potentially harder. If you want to close at the beginning and ask for more closing costs, you'll have less chances of getting your offer accepted. But let's just say you're in a scenario where you're closing at the beginning of the month and your closing costs are $5,000. Well, now there's $6,200. So let's just say we get $6,200 from the seller's concessions, so that way they can cover that extra bonus. It feels like, well, awesome. The seller paid those extra closing costs for me. That covers that, and I know I'm paying more on the prepaid interest, but at least the seller took care of that, and now I don't have to take care of that. Well, think of it this way. If you got $6,200 from the seller, that means you still would have been able to do it regardless if you close on the 1st or the 31st, right? So you still could have gotten $6,200 from the seller. Now, your closing costs were only $5,000, sure, but with those extra $1,200, you could have gotten a really nice home warranty paid for. You could have maybe got some HOA monthly dues paid in advance. Maybe the transfer fee got paid. Maybe you and the lender could have figured out a way to use that money to prepay the mortgage insurance or buy that down some way, or buy down the interest, or buy off some interest points, whatever. You could have done something with that $1,200 other than the seller paying that first month's rent for you, right? So however the cookie crumbles, it makes more sense to me to close at the end of the month. And yes, although your monthly payment, your first monthly payment will be due sooner, it still makes more sense to me, because if you're in a market where the seller doesn't want to pay that much closing costs, well, you don't have to ask for just the $6,000-7,000 of closing costs. When your closing cost is not included with the prepaid interest, well, you can ask for a lot less, and it's going to help you get your offer accepted. And if you're in a situation where you can negotiate more closing costs from the seller than you need, well, then use that extra reserve money to do something with it to benefit you in the real estate transaction. And of course, if you end up having to pay the closing cost, well, that's literally $1,200 that you save by closing at the end of the month rather than closing at the beginning of the month. So thank you guys for watching. I appreciate your time. This was a little more quicker video than most of my videos, but if you liked it, please hit like and subscribe. If you happen to be in Phoenix, Arizona and you're looking for a realtor, please consider me. My information can be found below, and my website is here, javiervidana.com. Here you can learn a little more about me, and you can scroll down and actually start searching for homes if you hit search on the top or in the middle of the page. And for everybody else, thank you so much for your time. I greatly appreciate you. I hope you all have a wonderful week, weekend, whatever day you're watching this. Thank you so much.